all students, today we are going to discuss an important topic, and that is Insurance Regulatory and Development Authority of India, structure, functions and role. This topic can be divided under following headings. Introduction, IRDAI historical background, objectives of IRDAI, IRDAI structure and functions, government control over IRDAI, its role and impact, challenges and finally conclusion. In modern times, insurance is becoming a major necessity for every person. Today, the insurance industry in India is growing at a very fast pace, keeping in mind the issues like increasing complexity in the field of insurance, increasing public awareness, increasing availability of options in the field of insurance and protecting the interests of insurance holders. The government established Insurance Regulatory and Development Authority of India, that is also known as IRDAI, on the recommendations made by the Malhotra Committee in its report. Students, it is true that today the life has become full of uncertainties and risks. So, there has to be some solutions to safeguard the especially financial stability for individual and business, and insurance is the solution for that. You might be acquainted with the concept of insurance. In this, the money is collected from all the beneficiaries for taking insurance, and fund is pooled for reimbursement to affected persons at the time of crisis, like financial loss due to loss to health or accident or even loss of life. But you know that there are so many institutions associated with the insurance industry in the form of the government, insurer, which are private and government both, third parties and policy holders. So, there is a need of an institution that can regulate the business of insurance industries, and for that purpose the government established Insurance Regulatory and Development Authority of India. IRDAI is a statutory body under the jurisdiction of Ministry of Finance, Government of India. It was constituted by the Insurance Regulatory and Development Authority Act 1999. IRDAI is the supreme authority that authorizes and regulates the insurance business in India. It also manages and oversees the growth and development of insurance industry in India. It operates with the mission to promote fair and transparent practices, protect the rights of policyholders and foster the development of sustainable insurance market in India. The headquarters of IRDAI are in Hyderabad, Telangana, where it moved from New Delhi in 2001. The IRDAI is playing very important role in orderly growth of the insurance industry in India. Student, you can see that IRDAI is a statutory body which has been established with Parliamentary Act, and main purpose of establishment of this authority is to promote a fair and trustworthy environment in the insurance industry in India. The headquarters of this authority is in Hyderabad, Telangana, and it is playing very active and efficient role in insurance industry in India. IRDAI historical background. Insurance has a deep rooted history in India. It has been mentioned in the writings of Manu, Yagnvalkya and Kautilya. These writings talk in terms of pooling of resources which could be redistributed in times of calamities such as floods, epidemics, fire and famine. The traces of insurance are also visible in the form of marine trade loans and carriers contract in ancient Indian history. The idea of insurance in modern India has evolved over time, learning from other countries, England in particular. The life insurance business began in India in 1818 when Oriental Life Insurance Company was established in Calcutta. Students, if you study the history of India, we find the traces of such kind of instrument which was equivalent to insurance or modern insurance, in which the money was collected against safeguarding the crisis in the marine voyages or in the terms of protecting the businessmen at that time. But if you see the modern insurance evolvement, we see that it took place in 1818 when the Oriental Insurance Company was established in British India. In 1914, the government of India started publishing returns of insurance companies in India. The Indian Life Insurance Companies Act 1912 was the first statutory measure to regulate life insurance business. In 1928, the Indian Insurance Companies Act was enacted and government collected statistical information about life and non-life insurance business conducted in India. In 1938, the earlier legislation was consolidated and amended for effective control over the activities of insurers. After independence, the Insurance Amendment Act of 1950 abolished principal agencies, but to curb the unfair trade practices in this sector, the government of India decided to nationalize the insurance industry in 1956. The Life Insurance Corporation LIC was also established that year. Student, as you see that the insurance industry evolved in a gradual manner in India in terms of various acts being enacted by the government, and after independence we see that the Insurance Amendment Act of 1950 abolished all the principal agencies, but the market was full of unfair practices in this field. So government decided to nationalize the insurance industry, and the famous life insurance company, that is Life Insurance Corporation of India, was also established that year. The LIC enjoyed monopoly until the late 1990s, when the insurance industry was reopened to the private sector. In 1993, the government set up a committee chaired by former Reserve Bank of India Governor R.N. Malhotra to propose recommendations for insurance reforms in India. The report of this committee, submitted in 1994, recommended that the private sector should be permitted to enter the insurance industry in India. The foreign companies should enter the industry in the form of joint ventures with Indian partners. Students, the year 1993 was also considered to be a milestone when the government decided to open the insurance industry for private sector. This happened after the recommendations of Malhotra committee, which gave the suggestions that the foreign companies should also be permitted to enter the market, but in the form of joint ventures with Indian companies. In 1999, the Insurance Regulatory and Development Authority of India was constituted to regulate and develop the insurance industry and was incorporated in April 2000. With the aim of enhancing customer satisfaction through increased consumer choice and lower premiums, the foreign companies were allowed ownership of up to 26%. The IRDAI has the power to frame regulations, and from 2000 onwards has framed various regulations regarding registration of companies for carrying on insurance business to protection of policyholders' interest. The FDI limit in the insurance sector has been raised to 74% according to the 2021 Union Budget. Students, we see that the Insurance Regulatory and Development Authority of India was established in 1999 and it was incorporated in April 2000. After that, it has been working efficiently to establish a friendly and trustworthy environment in the insurance industry in India. Now, the FDI limit, that is foreign direct investment limit, has also been increased from 26% to 74% in the 2021 Union Budget. Objectives of IRDAI. The objectives of IRDAI reflect in its mission statement, that is to protect the interest and fair treatment of the policyholder and to regulate, promote and ensure orderly growth of the insurance industry. Thus, objectives of the IRDAI include to bring rapid and orderly growth of the insurance sector, to safeguard the interest of the policyholder, to frame policies regularly to ensure that the industry operates without any ambiguity, to ensure fair conduct on the part of the financial market and transparency when dealing with insurance, to ensure quick claim settlements of the policyholders and eliminate insurance frauds, to prohibit other malpractices while ensuring effective grievance redressal framework. Students, if we consider the objectives of the RDI, we see that there is a long range of the areas, because insurance sector is such sector where the claim settlement is concerned, where the policy holders interest is concerned, where the mission to stop the malpractices is also concerned. So IRDAI had to include all these areas in its objectives. Structure. Section 4 of the IRDAI Act 1999 specifies the authority's composition. The member of the authority consists of the following: a chairman, not more than 5 full-time members, not more than 4 part-time members. These 10 members are supposed to work as a team and not individually. These members are appointed by the Government of India from amongst the persons exhibiting qualities useful to the authority, like deep knowledge in the field of life insurance, financial markets, accountancy, general insurance, economics and law, etc. Students, as we see the structure of this authority, we see that there is a team of 10 members and they work as a team also, and all these members are chosen by the government from various specialized sector like general insurance, economics and law, etc. IRDAI functions and powers. The functions of the IRDAI are defined in section 14 of the IRDAI Act 1999. These functions include: A. Licensing and registration. The IRDAI regulates the licensing and registration of insurers, intermediaries and insurance agents. It sets the eligibility criteria, qualifications and capital requirement for obtaining license in the insurance business. Students, licensing and registration is the most important part which IRDAI performs, because through this it permits any insurance company with proper qualification to enter the insurance industry. It is very necessary to set high standards in this regard of licensing and registration. B. Product approval. Insurance products launched by the insurance companies need to be approved by the IRDAI before being introduced in the market. IRDAI approves the product on the basis of required standards, suitability for the target customers and reasonable terms and conditions. Students, various private and government companies regularly introduce their own products, but all these products have to get permission from the IRDAI, which examines them on the standard of suitability for the target customers and appropriateness for the customers and terms and conditions, etc. C. Policyholder protection. The IRDAI takes all measures to safeguard the interest of policyholders. It bounds insurance companies to maintain a high standard of service, transparency in policy terms and conditions and timely claim settlements. It resolves policyholders' grievances through an integrated grievance redressal mechanism. Student, insurance industry is a field where lots of grievances rise due to not settlement of the claims or misinformation by the insurer, not giving the proper information to the policyholders, etc. And so it is the main functions of IRDAI to protect the interest of policyholders. Investment guidelines. The IRDAI specifies guidelines on investment activities by insurers, ensuring potential investment practices and risk diversification. These guidelines help insurers manage their investment portfolios responsibly to reduce the potential risk associated with investment. Student, when the money is collected from the various beneficiaries and pooled in a fund, these companies invest this money into various financial exercises like share market or other financial activities. So IRDAI has to take attention that these investments are made in such a manner which do not harm the interest of the policyholder. solvency margin. The IRDAI rule mandates insurers to maintain a solvency margin so that their financial stability and ability to fulfill policyholders' claim remain intact. The solvency margin acts as a buffer to protect the interest of the policyholders. Students, solvency margin is that fund which is access to the money collected from the beneficiaries, because in case all the claims have to be made at one time, there should not be any irregularity in this claim settlement. So, government bound all the companies to maintain solvency margin through IRDAI. Market conduct and anti-fraud measures. The IRDAI promotes fair market conduct and prohibits fraudulent activities, unfair trade practices and misrepresentation. It takes all measures to detect and deter fraudulent behavior and safeguard the industry's integrity and builds trust among consumers. Student, it is very necessary to maintain the trust among consumers regarding insurance industries. So, IRDAI takes all measures to prohibit all malpractices and fraudulent behaviors by the third parties or insurers. Guidelines for accounts. The IRDAI specifies the form and the manner in which the books of accounts should be maintained and statement of the accounts should be rendered by insurers and other insurer intermediaries. Regulating terms and conditions. The IRDAI regulates rates, advantages, terms and conditions which may be offered by insurers not covered by the Tariff Advisory Committee under Section 64U of the Insurance Act 1938. Students, the IRDAI take full attention to look after the financial position of all the companies involved in the insurance market, and it also takes the attention of the rates, advantages, terms and conditions and plans offered by all these companies. Supervision of business. The IRDAI supervises the insurance business with special reference to rural and social sector, and also specifies the percentage of life and general insurance business undertaken in these sectors. Promoting professional organization. To promote and regulate professional organizations, the IRDAI clearly specifies the percentage of premium income to finance scheme which may be healthy for insurer and consumers both. Students, the IRDAI not only supervises the business of all these companies, but it also sets a limit of the investment from this fund of the policyholders which may be healthy for the insurer and at the same time for the consumer. Thus, functions performed by IRDAI cover a long range from issuing, renewing or cancelling registration of companies to adjudicating disputes and redressal of grievances of the policyholder. The powers of the IRDAI. This agency, which has been formed by IRDA Act 1999, independently regulates insurance industry in India. Its two primary powers are quasi-judicial powers. With these powers, the IRDAI resolves dispute between insurance companies, policyholders and third parties. The IRDAI can issue orders and make decisions in these matters. Second, supervisory powers. With supervisory powers, the IRDAI ensures that Insurance Act is followed by insurance companies. It also monitors their financial health and checks their compliance. Student, to implement its plans and policies, there is need that this agency should be given some powers. These powers are quasi-judicial powers and supervisory powers. With these powers, IRDAI not only resolves the dispute between policyholders and insurance companies and third party, but it also supervises the and monitors the financial health of these companies, because that is the base of trust which is to be maintained in the insurance industry. Besides this, IRDAI closely collaborates with the government, RBI and SEBI, that is Security Exchange Board of India, for effective regulatory coordination. Government control over IRDAI. According to Section 18 of IRDA Act 1999, the central government can issue directions to the IRDAI on matters related to policy. Such directions bind the authority to act according to the government's directions. If the central government realizes that the authority is not able to discharge its functions properly and it has become necessary for the government to intervene to ensure public interest, then the government can appoint a person to act as the controller of the insurance. The authority has to furnish all those documents, statements and other particulars that are demanded by the government. The authority presents to the government a report consisting of all the activities it performs, expenses incurred, assets formed, cash generated, promotion and development of the insurance business during the previous financial year. Student, when we consider the powers of the IRDAI, it is appropriate to consider the government control over IRDAI also, because government has the purpose of protecting the interest of the policy holders. So, according to the act, government can give directions to the IRDAI in the policy matters and authority has to follow those directions. If it realizes that the situation has deteriorated beyond a limit, then it can appoint a person to act as the controller of insurance also. Besides that, the IRDAI has to present all the documents which are required by the government. It has to submit a report which is based on annual progress of the IRDAI activities in each financial year. IRDAI role and impact. The IRDAI has played important role in shaping the insurance industry in India in orderly manner. Its impact can be visualized in following areas. First, role in regulating insurance sector. The authority is efficiently keeping close check on the insurance sector to maintain a healthy environment with trust and customers' satisfaction. Second, role in awareness to insurance. To efficiently protect the interest of the policyholder, it is necessary that they are aware of all the policies and plans of the authority which are beneficial for them. The IRDAI operates various programs to increase their awareness. Students, we see that IRDAI plays very important role in shaping the insurance industry since its inception. First, we see that the insurance industry is based on trust among consumers and insurers, which is created through proper policies and plans, and IRDAI has been successful in it. Other factor is related to insurance industry, that is awareness. The consumers lack the awareness regarding the insurance plans, their rights and their interest. So, IRDAI taking all the steps to increase their awareness regarding all these things through its various programs. Third, role in protection of policyholders' interest. The main objectives of IRDAI is to protect the interest of the policyholders and it has kept up with its purpose. The efficient working and regulation of IRDAI has resulted into healthy and trustworthy environment in insurance industry. Fourth, role in development of insurance products. The IRDAI regularly introduces new methods and products to ensure the growth of the insurance market. For example, as a result of privatization, the IRDAI allowed unit linked insurance plans. Students, the prime purpose of IRDAI is to protect the interest of the policyholders, because they have to face the delayed settlement of the claims or misinformation regarding the plans, all these things. So, IRDAI takes all the steps to protect the interest of the policyholders in this regard. When we talk about the insurance products, IRDAI has always been keen to introduce new plans and products according to privatization. For example, you can see the unit linked insurance plans. These are the plans in which the money collected from the policyholders is linked to the share market and invested in the securities, and whatever may be the profit from that, it is also distributed among policyholders. So, this is a new step which has been taken by the IRDAI. Fifth, effects over competition in the insurance sector. After the privatization of the insurance sector, the competition has increased. Now, it has expanded up to international level. The IRDAI has to maintain a healthy, competitive and customer friendly environment. Sixth, effects over banks and post offices. Besides giving security against any kind of risk, the insurance sector has become a popular medium of savings and investments. The IRDAI has its role in diverting the funds from banks and post offices to insurance industry. Students, the IRDAI has played significant role in affecting the competition in the insurance sector, because there are private companies as well as government companies, and IRDAI has to maintain a healthy competition which may be friendly to policyholders also. And if you see the role of IRDAI in diversification of the from the individuals, you see that now the insurance has become a medium for saving also, and the income which were being received by the post offices and banks is now diverting to the insurance sectors also. Seventh, role in insurance marketing. The marketing scenario in insurance sector has transformed in great manner. The IRDAI has affected the field of competition, product introduction and customer awareness significantly. Eighth, role in government responsibility. The insurance regulatory and development authority is playing very important role in discharge of government responsibility towards insurance industry. With the help of IRDAI, the government is taking all measures to ensure uniformity, accountability and responsibility in the insurance industry. Students, the IRDAI is playing significant role in the marketing of insurance products also, because IRDAI has to develop the insurance industry in India in orderly manner. So, it is taking all the steps in this regard, and RDI can be appreciated for the help it is giving to the government in discharging its responsibility towards to the insurance industry in India. Ninth, role in individuals' life. The IRDAI has increased the awareness in the society towards insurance and importance of savings. The policies and plans introduced by it for a common man has resulted in a great impact on the life of an individual. 10th, role in sound economy of India. The role of IRDAI in sound economy of India cannot be ignored, because the money invested by the investors in various insurance products can be utilized by the government for various development activities in the country. Thus, the role of IRDAI is important. Students, if we see the individual's life today, we see that the IRDAI has motivated a common man to make savings and getting the measures of safeguard for uncertainty in life through insurance companies. So, this appreciation should be given to the RDII. Also, if we see the economy of our country, we see that IRDAI has contributed a great thing, because the money which is collected through policy holders can be utilized for the development plans by the government, and that is a very great contribution by IRDAI. IRDAI challenges. The insurance industry plays a crucial role in the global economy. However, insurers today face numerous challenges which are impacting their profitability, growth and relevance. The IRDAI also has to face these issues, such as: first, digital disruption. The insurance industry is being disrupted by rapid technological advancements in the form of artificial intelligence, that is AI, big data, blockchain and machine learning. The IRDAI has to harness the power of technology to improve the customer experience and generate new revenue streams. Second, climate change. The effect of climate change in the form of extended periods of drought, flood, earthquake and heavy rainfall have forced insurers to increase the premium for their products. The IRDAI needs to settle a negotiable premium which may be affordable for policyholder and insurer both. Students, the responsibility of IRDAI is not free of challenges. There are many challenges. First of all, we talk about the digital disruption. We know that the technological advancements are changing rapidly, and they are having impact on insurance industry also. So, it is the responsibility of IRDAI to harness all these changes to increase the revenue and also the customer satisfaction. There is one more thing, that is climate change. And what happens due to climate change? The insurers are increasing their premium because they want to be sure of their profit also. So, in these conditions, IRDAI has a challenge to set a negotiable premium which is affordable by the policyholders and insurer both. Third, regulatory compliance. The IRDAI has to regularly change the regulatory policies related to issues like privacy laws, consumer protection laws and correct information to customers. The challenge for IRDAI is to make insurer conform to these changing regulations. Fourth, cyber security threats. The insurance industry is a natural target of cyber criminals due to all the sensitive information insurer hold about their customers. The IRDAI has to deal these cyber security risks with measures like employee training, access control and network security, etc. Students, IRDAI has a challenge of making all the companies conform to all the policies which are made by the IRDAI, and another threat, that is cyber security threats to the insurance industry, because it is adopting the technological aspects rapidly, and with technological aspect cyber security threats are probable, and IRDAI has to take all the measures to safeguard these things with the employee training or access control or network security, etc. Conclusion: insurance is an important aspect of economy, and at the same time it is an opportunity available to safeguard individuals against uncertainties and risk. The Insurance Regulatory and Development Authority of India is efficiently regulating the insurance industry. The authority needs to concentrate on issues like cyber security, adopting rapid technological changes, speedy resolution of claims and changing customer needs. The role of IRDAI is very significant for growth and development of insurance industry in India. Students, thus we can say that insurance is not an unknown word for common man and business persons. So IRDAI is playing very significant role to regulate and to develop the industry in an orderly manner, though there are some concerns which has to be taken care by the IRDAI, and we can say that in future this authority is going to be a key factor for the development of insurance industry in India. Thank you.